right then. Today we've got Nick Bell, KOBA's head of underwriting and insurance, here to explain a bunch of things to us about pricing, insurance, and really where other future opportunities might be for EV insurance. Hi, Nick. How's it going?
Yeah, good. Thanks, Andrew.
Look, we work together every day, and I think it's really exciting going into this new market and this new world. And what we're hoping to do is really break it down for the people that are listening to help them understand and help them see the opportunity that we see, and help them understand why EV insurance is priced the way it is at the moment, why the products are set the way they are at the moment, and ultimately where KOBA can work and can create a product over the next couple of years in order to service the market. So look, why don't we just start at car insurance 101? How is car insurance even created? What is the coverage and how are prices created?
Car insurance within the Australian market, and even if you compare it to typical overseas car insurance, it's a pretty standardized sort of product, and it's pretty uniform across the globe, really.
Are you saying that for the most part, all car insurance products are the same or similar?
Absolutely. There's differences around the edges in terms of maybe some features and benefits that come included. But when you look at the fundamental piece that you want your car covered because it might get stolen, because it might get hit by a hailstorm, because you might crash it, that's all the same. And there's an insurance policy, there's an obligation to either repair that car or, unlikely event, if it's really badly damaged, you're going to get a payment for a total loss.
And so what are the main things that go into creating the price?
The typical industry and the way an insurer looks at things is they're trying to work out chances. It's a game of chance. In some way, they get insurance is a form of sophisticated gambling. So what they're looking at is the car you've got. How much is it worth? What sort of make is it? Is it a powerful car or not so powerful car? Is it old? Is it new? So what's the likelihood it might get stolen? And they're applying what they call, sort of risk factors to that. So there's the car. Then they're trying to find out, okay, about you. What sort of driver are you? How old are you? What's your claims history like? All those sorts of things about you specifically. Are you male or female? There's differences between the accident rates for males and females. So they're trying to work out you as a driver. What's the likelihood you might do something that might cause a claim? And then there's the third aspect is generally kind of where are you? And so do you live in the city? Do you garage your car? Is it in an apartment? Are you in the regional areas? Are you in the northern states of Australia where perhaps there's a risk of cyclone and hail that's a bit higher than, say, if you're down in Melbourne or in Adelaide or something like that? So in the end, they're trying to say, as much as I can ask about you, what sort of chance do I think that you might have an accident, and then I'm going to charge the price that I think applies to that. It's really complicated because there's lots of questions and there's millions of combinations of prices. And that's why, like I said, it's a volume game.
Okay. But if nothing changes in a year, like I'm only getting a year older, right? But I still live in the same place. I still drive the same car. Why are my prices going up?
Yeah. So then the other big impact on sort of the general rate levels are different combinations of things, but obviously inflation is one. So an insurer is going to react to what's happening in the market. Competition can affect it. Our argument here at KOBA is that competition is not that strong in the Australian market. It's a fairly settled, stable, concentrated market. If you've got new competitors coming in with new offers, that can help drive price competition. That's not really the case in Australia right at the moment. But then also, in addition to things like you've got insurers who maybe are listed on the share market, or they've got corporate plans where they need to make certain margins, and they're going to adjust their rates based on what that's dictating to them as well.
And does it have anything to do with other insurance products, things like home or pet or anything like that? Like, how does that influence my car insurance price?
It does. And so insurers who have got multiple products in their suite will look at their overall results, and they might need to make decisions at times to sort of cross-subsidize something. Typically, say something like home insurance is subject to really big catastrophe events, a hailstorm or a cyclone in Queensland, which makes for a pretty rough year's results for them. And they'll, rather than just slugging the home insurance book to get some extra rates, they might throw bits through into their motorbook or into their pet insurance or their travel or whatever it is to help settle the overall story that they've got.
Okay. And then so specifically in the last 2 years, why are rates going up so aggressively?
Climate change is having an effect. There's no doubt about it now, because behind the scenes, what that's affecting is the global reinsurance market, which insurers tap into to help their solvency positions and so on. So that is affecting things on a global market. And then so you get the catastrophe of events happening in Australia that are going to affect them on big scales. But there's also particularly the motor insurance. Really, since COVID, we haven't quite recovered from pretty severe claims inflation that we've faced based on parts and the whole supply chain globally.
What does that mean? The parts inflation?
The cost of repairs is what's gone up. So people aren't having more accidents at a higher rate than they used to. That's still really pretty constant. What's gone up is the average cost. That can be driven by a range of different things. The thing that's affecting that cost of the average claim at the moment is things like the cost of repair, the cost of parts, labour costs and so on. They're not really going up. But what's going on up behind the scenes is the cost of the parts, the availability of them, the timeliness of them, because of those global supply chains being interrupted over the last couple of years.
So you're working on a product at KOBA now. What are some of the kind of big problems that you're trying to solve?
The big problems we're trying to solve with our EV product is this idea that the current mass insurance market is not really catered well. It's because the EVs as a cohort are being sort of pigeonholed into this broader market. They're being perhaps conservatively priced because of that safety position that the insurers are adopting. So there's sort of automatically an opportunity there to focus more specifically on EVs and set up the product and the pricing around that. There's features and benefits that are sitting in existing car insurance products that don't really take account of maybe some of the differences that EVs have. So there's options to change what comes with the product as well as standard cover to be more tailored to EV owners. There's just this different dynamics of being an EV owner.
Nick, what makes you the most excited about an EV insurance product?
EV insurance hits a number of points for us. Firstly, EVs are newer and they come with good tech. They're connected cars. We love data. That's what we do. We collect data, real-time data. So that helps with the risk and the pricing. That really aligns with us and what we do. The gap in the market, we've got a great opportunity to service EV customers. They're being lumped into an overall assumption, whereas we have got a tech-based approach. We've got the app, and we've got a more personalised service approach that we can do for EV owners. The EV owners are generally early adopters as well, so they're a bit ahead of the curve. And there's a uniqueness about that we can cater to through that combination. The data, the app, personalised service. We're a bit smaller, we're a bit more flexible, whereas, the big guys, in their own interest, are trying to cram people through a big funnel. We don't work that way.
But EVs have been around in Australia for 7 or 8 years now. There's 200,000 cars on the road. Is that not enough?
Not in the scheme of the portfolios these insurers have got. If we're looking at sort of maybe 16 million cars on the road in Australia, there's probably about 1.5 million claims a year within the industry. And then we're talking about the EV industry, maybe 10, maybe 15,000 claims at most. It just pales into insignificance total compared to 1.5 million claims that they're feasting on the data of that to try and work out their prices. But that means they're always going to be sort of behind the curve of this growth of EV that's occurring right now. That's the way they look at it.
Tell us about the data that comes from the car. Can't that help? Aren't EVs fully connected to the internet, and can't that data help with the pricing?
Well, look at KOBA, where this one of the pieces that we're really excited about, because this is information that can be gathered in real time, gathered ongoing. So it reduces this sort of assumption-based point in time piece that happens with insurance pricing. In the past, I'd ask you a set of questions at a certain point in time. I'm going to generate a price on that, and then I'm going to overlay sort of my concerns about inflation, and you just carry that through over time. Versus what we're saying and what we can do here at KOBA is we can get the information based on the kilometres that you're driving, the type of driving that you're doing, how safe you are as a driver. We can get information from the car about what safety features are on it. So we get this much more granular, up-to-date, ongoing set of information that we can factor into the pricing that sort of takes away this big overall assumption piece.
And so going back a half a step, why are the EV prices so high? Why are they higher than normal cars at the moment?
Part of that reason why EV prices are so high, because they're being lumped in, waiting to build the data. And other than that, they're being lumped into all this set of assumptions around the overall, including the combustion engine cars. It's just being mixed into a big pool. If you're being judged on the profit margin you're delivering for a big insurer, you naturally have a conservative mindset. They're looking at this data, they're saying, we don't have enough of it yet, so let's err on the side of jacking up the prices a bit, just to be safe. You've got an additional piece in the mix, which is genuine. There are some differences with EVs. There are not as many repairers who are equipped to repair EVs. So the whole industry, the repair industry, if you think about it, was kitted out to repair ICE cars. Suddenly EVs come on and they've got some differences and maybe some uniqueness in some of the tools and so on that are required. So you've got a section of the repair industry that becomes skilled at doing it, but not the same. So obviously not the same set of competition. That starts to drive up some prices, perhaps on the labour.
And what are some of the EV myths out there? Like, why don't insurers like EVs?
One of the myths is the battery. What happens if the damage is such that the battery becomes damaged? So does an EV potentially become a total loss more readily than an ICE car if it's a heavier hit? Because when an insurer pays you out for a total loss, then they keep your car and they sell it as salvage. So they take the salvage as a bit of a recovery against the loss they've paid out on. What's the market like for salvages at auctions? That's much less developed and much less certain at this stage, because the salvage market for ICE cars is obviously well entrenched, has been going for many, many years, and everyone roughly knows what they're going to get in return. So it becomes part of that calculation about, if I need to total loss this car, what am I going to get back if I sell this wreck for salvage? That's less developed in the EV world as well.
Thanks, Nick. That was great. Thank you for telling us all about pricing in the wide world of insurance. Thank you for helping us understand what you're looking for as we create this new EV insurance product. We're excited to see how you put it together in the new year. Talk to you very soon. Thanks.